John Thomas, the Mad Hedge Fund Trader, probing for a bottom. Yes, we do have a bottom coming up in the next month or two. Probably one of the best money-making opportunities of your lifetime, because after that, the next move is to Dow 240,000. That's up from 30,000 today in the next 10 years. So yeah, a year or two of pain, and then it's off to the races. So I usually am working out of Silicon Valley. Take out your pen and paper to take notes or start typing into your smartphone. What I'm about to tell you will blow you away and change your life, for I'm in the early retirement business, and that is your early retirement. So let's do a little bit of flying here in a 100-year-old biplane. Let's see if I can lower this sound a bit. Okay, can you hear me? Why listen to John Thomas? Well, I have 50 years experience in the financial markets, 10 years as the economist correspondent in Japan and later the White House, 10 years working for Morgan Stanley International in New York and London. After that, I started one of the world's first hedge funds, first international hedge fund. And 14 years ago, I started the Diary of a Mad Hedge Fund Trader. And we are currently up 51% so far in 2022. And if you ever need a guy to fly you around in a 100-year-old biplane, I'm your guy, and I'll tell you more about this later. So the correction is 90% over on a price basis, but only 50% done on a time basis. This could extend into late summer, even the fall, depending on the price of oil and the price of other commodities. At 3,500, the S&P 500 has a price earnings multiple of only 14 times, approaching a decade low. While prices are falling, earnings are rising at a 10% annual rate, making the best stocks very cheap, very fast, and those are the ones we've been buying on those down 1,000-point days. New bull market should begin this summer and then take us to new all-time highs, possibly as early as the end of this year. 2022 is looking even better. Company sales will be 20% higher, profits exploding, operating leverage of US firms is the highest in history. COVID is almost done. 62.99% trailing one-year return. So who is John Thomas? Well, if you're going to spend the next hour with me just to find out who I am, my family origins are very humble. Growing up as the oldest of 7 children on a remote farm in Southern California, I lived the all-American childhood playing Little League Baseball and becoming an Eagle Scout. Wasn't much to do in the old days in rural California, but hunting. So I picked up a job as a paper boy for the Los Angeles Herald-Examiner. I found the stock pages, bought IBM at 20, sold it at 30, suddenly found a far better way to make money than delivering newspapers off the back of a bicycle. By the time I was 16, I earned enough money to fly to Europe. By the age of 17, I had enough money to fly to Europe and had visited more than 50 countries and spoke 4 languages. At UCLA, I majored in math and DNA research, which landed me a job at the nuclear test site in Nevada. Their yield didn't mean interest paid, but millions of Russians killed. I didn't see a future in that, so the government sent me to Southeast Asia for a few years of intelligence missions, where I learned how to fly and jump out of perfectly good airplanes. There I advised the militaries of America's Asian allies. As the war wound down, I became a foreign correspondent for The Economist. When they learned I had a math degree, they switched me over to covering the Asian economy and the stock market. As a foreign correspondent, I covered China during the Cultural Revolution, was the first American reporter to visit North Korea since the Korean War, and covered the rest of the continent all the way to India. I figured out very quickly you didn't have to be that smart to make money in the stock market. So I got into the industry, joining Morgan Stanley. After 10 years, I started my own hedge fund, and that's me losing the All Japan national karate championships, never enter a karate final with a broken wrist, which I did. I rapidly became the top performing hedge fund of the 1990s, eventually bringing in a 1,000% return in a decade. As then the money really started to pour in. It's an understatement to say that when your income goes from the thousands to the tens of millions, it has a really big impact on your lifestyle. 43.78% annual average return. And this is the part I really like. This is what we've been doing all year. We've been going up to new all-time highs while the stock market has been going to continuous lows. That's what hedge funds are supposed to do. That's why they call me the mad hedge fund trader. I now spend my days pursuing my first love, finding winning trade alerts, but now I do it from my 3 mansions in Zermatt, Switzerland, Lake Tahoe, and San Francisco. And I've quit turning millionaires into billionaires. There's far more job satisfaction, leveling the playing field, and making it easier for the average guy. If I can take a $50,000 account and turn it into 500,000, that is more job satisfaction than I could ever get anywhere. However, every silver lining has a cloud. That's my 2020 tax return showing I had to pay 8.2 million in taxes on 20 million in trading revenues. In the little free time I have left, I pursue my other love, flying vintage aircraft on weekends. If you see an old plane flying loops over San Francisco or London these days, it's probably me. Ultimate luxury is, of course, to give to those who need it. As a Marine Corps veteran, I volunteer for grief counseling for widows and orphans, and I'm a major donor to Wounded Warriors. Bonds are in free fall, but we are approaching the end of the short play with a 3.38% 10-year yield. With rising earnings and falling prices, stocks get very cheap very fast. Keep your tech stocks as out of your earnings are being wildly underestimated. Tech always comes back. Rising interest rates have made the US dollar the go-to currency with more to run. Commodities should keep running for the rest of the decade. Use the current sell-off as a great entry point. Bitcoin trashed, got all the way down to 17,000, an 18-month low, and bankruptcies of individual NFTs and brokers are rising by the day. If you're wondering why I'm in such a good mood, it's because I'm flying a P-51 Mustang. That's a World War II fighter with a 2,000 horsepower engine. Love flying this plane. So global economy is getting a China COVID bounce. China's industrial production collapsed. Retail sales down 11%, but an end of the Shanghai shutdown could bring a global economic recovery. The Fed may overshoot on rising interest rates. Going too tight, too fast may be necessary to break the back of inflation. And we're looking at 275 basis point rate hikes over the next 2 months. Consumer sentiment dives from 59 to 50. Q1 GDP is negative. That means we only need one more negative quarter this quarter to get an actual recession. However, consumers will keep driving the US economy. Never underestimate the ability of Americans to spend. And of course, you all know inflation's at a 40-year high at 8.6%. Stocks are back from the Dow, back from the dead. The Dow broke 30,000 for the first time in a year, down to 8,000 in less than 6 months, or 21%. However, JP Morgan thinks stocks will hit new highs by the end of the year, even if oil hits $150 a barrel. And I agree with Marco Kolanovic. Strong dollars demolishing corporate profits. Expect the market to continue range trading for the next several months, possibly the rest of the year. DocuSign crashed 24%. The CEO resigned. It's further proof that money-losing small tech has a bumpy road ahead of it. Target warns of more margin squeeze with too much inventory and flagging demand. So look for a terrible first half, which only has 9 days left, and then a great second half. This is what our outlook is here. This is a 2-year chart. We see a worst case bottom of 50 in Aspire, 3,500 in the S&P 500. After that, a hard bounce to a new high by the end of the year. So we play this with a barbell portfolio. We put half our money in big tech because big tech accounts for 2% of the US workforce, 27% of the market cap, and 38% of all US earnings. And then we put the other half of our money in domestic recovery plays. Those include railroads, airlines, cruise lines, couriers, steel companies, banks, commodities, construction, credit card companies, hotels, casinos, and online ticket sales. So NASDAQ absolutely destroyed, dropping from 18,000 possibly to as low as 9,000. After that, we see an enormous rally, at least to 14,000 by the end of the year, up 40% and maybe a lot more. Microsoft, another big winner, it's holding up remarkably well, although it has dropped $100 from its high. We're looking to buy the next dip here, targeting $320 a share for Microsoft by the end of this year. Apple, another big winner here. Some people think it could drop to 100. I don't. I think, maybe 120 or 110 is the worst case scenario. Then you want to load the boat. And we're targeting 200 by the end of the year, or a near double. These are the best quality stocks people want to really pile into on any recovery. Amazon, tough getting used to the split adjusted price. It just split 20 to 1. So, we're looking for Amazon to hold right around this level, 105, 107, and then rocket up to 160 by the end of this year. Alphabet, another big winner, advertising something you don't want to be in during a recession. You absolutely want to be in it during any kind of economic recovery. We see Amazon holding a little bit lower than here and then going right back up to 3,000 by the end of the year. Salesforce, another big winner. Looks like it's already started its move. I'd be looking to buy any attempt to double bottom down here at the 160 level. We see a potential double by the end of the year, $300 a share by the end of 2022. Second half of the barbell bets on a massive domestic global recovery to begin by the end of 2022. Upside potential for recovery stocks in 2022 far greater than it is for tech. Some of these domestic stocks have not moved for 5 or 10 years, focuses on economic sensitive issues, makes great counterweight to a high growth technology portfolio. We could spend all the next 2 years rotating back and forth between these two groups. Okay. So Boeing is the leader here. Looks like we're trying to double bottom right around these levels at about 100. Then we see 200 by the end of the year. So yeah, potential 100% gain in Boeing. Financials do incredibly well in periods of high interest rates. The only reason they're weak now is because of recession fears. You eliminate the recession fears and banks double on a 3-year view. So buy JP Morgan on the next dip. Visa is the touchless payment play, holding a good range here. We'd buy at the bottom of the range right around this level here at the 190 level. We see a potential move to 300 by the end of 2022. Union Pacific, you get an economic recovery. You have to move lots of big stuff. We're getting in here at a great price. Again, buy around the 210 level. Our target is 300, up about 50% by the end of the year. Federal Express, you also have to move a lot of small stuff in economic recoveries. So again, buy at the bottom end of this range. We see a move potentially to 350 by the end of 2022. Berkshire Hathaway is the one-stop barbell portfolio, has heavy weightings in Apple, financials, banks, and so on. and it's just had a sell-off all the way down to about the 270 level. After that, we see a move to 400. So not only do you want to buy the stock, you also want to go into options and the long-dated options, which are called leaps. Bonds have been getting slammed. They hit a high of 3.48% on the Fed tightening. 8.7% inflation shows the worst maybe yet to come. 200 basis points is already in the bond market. We may have a total of 300 basis points in tightening by the time they're done. 30-year fixed rate mortgages have rocketed as high as 6.3% in only 6 months. Bulk of the move down in bond prices is done. We were at 182 years ago. We could go as low as 100 by the end of the year, but the big money has been made in the bond market. So we've been selling short this baby for 2 years straight. Just on the bond leap since November, we got 100% return. And, we can teach you exactly how to enter those kinds of trades. But we're getting close to the end of the road here. We got as low as the 107 handle last week. We're back up to 112 now. So the big money has been made. Treasury yield, it's actually 3.48%, targeting 350 by the end of the year. After that, depends on the Fed. Foreign currencies, dollars taking a break from a 20-year high thanks to temporarily falling interest rates. Euro pops on dollar weakness. Shanghai shutdown is boosting the yuan. Commodity currencies like the Australian dollar and the Canadian dollar are going ballistic on rising oil prices. Long-term, the US dollar fundamentals are still poor. Dollar short could be the new 10-year trade, but you may have to wait till next year for it to start. So stand aside from Forex for now that are better fish to fry. US dollar basket, that's your 20-year high right there. We've pulled back and are holding right around this level. I'd be looking to sell the next big rally in the US dollar. Australian dollar, commodity currency, long-term commodities look great. We're back down here at the 68 level. I'd be buying Aussie right around this level because long-term we're looking for it to go to 1-to-1 against the US dollar. That is about a 60% rise from current levels. Energy and commodities, we hit new highs and then gave them up very quickly. We got to $7.29 a gallon in California, $5 everywhere else. The average household is now spending $5,000 a year on gasoline, unless you drive a Tesla like me, in which case you're not spending anything on gasoline. Total European ban on Russian oil imports is pushing energy prices up globally. Shortage of US refining capacity has been caused by owners moving facilities to regulation-free Mexico to avoid environmental concerns. Transportation-related businesses are getting killed. Keep buying Tesla on dips. And by the way, we were up $100 over 2 days since last week. There's a 1-year wait to buy the cars. They're looking to make 1.4 million of them this year. Avoid all energy plays like the plague. It is in the process of making a 14-year double top right around the 150 level. So oil we see potentially getting as high as 150. After that, the next move is to $10. As number one, we discount an entire recession. Number two, when the Ukraine war ends, they'll knock another $50 off the price of oil. Here's your 20-year chart, and here's the double top I'm talking about, 150 in 2008, when we put on a big short. Another big shorting opportunity setting up here at 150. After that, $10. Precious metals still asleep. Gold is taking a break on a global risk-off move. It's more of a commodity play now than a risk hedge. Recently, falling interest rates give gold an additional boost. It is, after all, a classic inflation play, which will rise before it falls. Silver is the better long-term play because of industrial demand, and it's also used in solar panels. We actually sold gold back here in March, got a good $20 dip out of it, looking to buy on the next dip. We think we could hit 3,000 sometime in 2023. Barrick Gold is the world's largest gold miner, had a massive sell-off, looking to buy on the next dip. We see $50 sometime next year for Barrick Gold. And the Silver Trust is the better play, looking to buy somewhere in the high teens. We see $50 an ounce for silver sometime in 2023. So don't play with matches. You could probably do okay just buying all the stocks I mentioned above and forgetting about them. However, the reality is that conditions for these companies change every day. They're all viciously competing, trying to put each other out of business. If you don't get daily updates on the fundamentals, you could easily get wiped out. Today's big winner could instantly become tomorrow's loser. That's why you need someone like me to guide you through the thicket to avoid an out-of-the-blue blow-up. I gained financial independence for life, and so can you. All of this can be yours. Discover how to make thousands of dollars a year in extra income. Go from complete beginner to seasoned pro in weeks. Learn how to quit your day job and trade for a living full time. Trade from anywhere, anytime. Supplement your retirement income with the satisfaction of booking winning trades by the hundreds. And that's me struggling to smile, sending you a trade alert from North Africa. And it is hard to smile because it is 120 degrees in this picture. And by the way, go ahead and put your questions in. And if I get some extra time at the end, I will be answering them. Harsh truth is, you really need my help. The majority of individual traders lose money. They lack the correct training and discipline to succeed. Most broker research suffers from grievous conflicts of interest. Wall Street is all about moving money from the uneducated to the educated. The easy solution to that problem is to get educated. Fidelity did a 20-year study and discovered that their top performing investors were dead people. Why do dead people do so well? Because they never sell. That's not such a bad idea when the Dow is in the process of going from 600 to 38,000, which it has done since 1982. And by the way, this is the last broker I used. His name was Pinocchio. Found him in a shop in northern Italy. Notice that the entire shop is full of Pinocchios. That's all they sell are Pinocchios. You need a real pro to guide you through the market maze. The market is not monolithic, and 95% of it can be completely ignored. There are a few great sectors and a lot of awful ones. You can earn a 10 times return on the great ones, but get wiped out by the losers. Let a 50-year veteran steer you to safe waters. Let me sit next to you and guide your hand on every winning trade. This is the secret to my success. This is the Mad Hedge Profit Predictor, my market timing index. It's an artificial intelligence-driven algorithm that analyzes 30 different economic, technical, and momentum indicators all day long. Took a team of mathematicians, 1,000 hours of calculations to come up with this algorithm. Why do you need an algorithm? Well, why use a toolbox missing its most important tool? Algorithms have become so dominant in the market, you should never trade without one. It does the work of a seasoned 100-man research department in seconds. It runs real time and optimizes returns with the addition of every new data point far faster than a human can. Imagine a trading strategy that upgrades itself 1,000 times a day. Don't go to a gunfight with a knife. If you're trading against algos alone, you will lose. Algorithms provide you with a defined systematic trading discipline that will enhance your trading profits. And I'm not the only one using algorithms. I was walking on the waterfront in Miami a few years ago, and I found this super yacht, and look what it's called, Algorithm. Obviously, they're working for more people than just me. In fact, some 80 to 90% of all current trading is algorithm driven. This is 3 years of our profit predictor performance. And notice you get lots of buys at market bottoms, sells at market tops. Buy, sell, buy, sell. It's a real money-making machine. This is our Mad Hedge performance. Average annualized return, 44.23%. That is 2.81 times the S&P 500. And once again, while the market's been going down all year, we've been going up all year. What happens when the market was going up last year? We were going up even faster. So this is really an ideal trading discipline that you want to get involved with right now. Bill was a struggling tobacco farmer in Virginia who wanted to supplement his fading agricultural income. After making $3.4 million with my trade alerts, he still farms, but he's now growing grapes in California's Napa Valley for the high-end wineries. Philip was tired of working in the boom and bust of the oil and gas industry in Texas. After following my trade alerts and doubling his money every year for several years, he now earns a generous living as a full-time trader. Richard made millions religiously following my trade alerts. He now spends his retirement restoring vintage aircraft and flying them over the California coast. And Greg turned $100,000 into $1.5 million solely on my trade alerts. He bought a new home in Orange County, California with Tesla solar panels, Tesla power walls, and a Tesla Model 3. Still had enough money left over to put 3 kids through college. So what do we do about all this? Well, stocks, you want to buy the summer sell-off. Bonds, you want to sell rallies. Commodities, buy the big dips. Energy, stand aside. Currency, sell dollar rallies. Precious metals, buy the dips. If you were not up 69.35% in the past 12 months as I was, you are reading the wrong newsletter or following the wrong trade mentoring service. 69.35% trailing 1 year return. And look at this, we have been up almost every day this year, just up, up, up. 44.23% average annualized return. You get those kind of numbers, you get to do things that other people don't get to do, like take the Queen Mary from New York to England and ride the owner's suite, which is 2,200 square feet, 2 stories, and has 2 full-time butlers. When you get to England, you can take the Orient Express. Caution, both dinners on the train are black ties, so make sure you bring at least 2 tuxes for this part of the trip. And when you get to Venice, you can go island hopping in your own personal helicopter. Saves a load of time. Here's the very long view, and this is where the big money will be made. The 2000s and 2010s were the hard decades for making money. The 2020s and the 2030s will be the easy ones as a global demographic wave brings on a new golden age. 85 million millennials will become big spenders over the next 15 years, while 80 million baby boomers, a drag on the economy, will fade from the scene. That would create an economic boom that will last another decade, starting in 2022. You think I'm smoking California's most popular product? Think again. The Dow average went up 20 times from 1982 to 2000 in only 18 years. Are you ready for a replay? This is what happened the last time we had a demographic tailwind that's just beginning right now. If you go up 20 times from the 2009 bottom, that takes you to 120,000 by 2027. And if you think this is delusional, think again. We are here right now. We've already covered a large part of the move, and we only need one more quadruple to get to the 120,000 target. And if I'm wrong, it's not going to 120,000. It's going to 240,000 over the next 10 years. Except this time it's different. We now have a tech turbocharger. Technology is hyper accelerating on all fronts simultaneously, and the pandemic greatly sped up the rate of change. The development of functional quantum computers means that computational ability is about to increase a trillion-fold at no cost. World's major computational challenges will be shortly solved, such as weather forecasting and cancer cures. All major human diseases will be cured within 10 years. Live another decade and you'll have a shot at living to 150. Needless to say, barbell stocks dominate in this scenario and will account for the bulk of stock market gains in our lifetimes. The 90s had cheaper computers, cheaper operating software, and a new internet. 2020s will have 10 times this number of new technology drivers. And this is a picture of a quantum computer. It's basically a giant freezer because it needs to operate at 270 degrees below zero. So who'll show you how to play the next 90,000 Dow points? Sit with me, John Thomas, the Mad Hedge Fund Trader, and my Global Trading Dispatch. Discover how you can tap into the top performing trade mentoring service in the industry. Follow my research and market beating trade alerts, and you will rake the profits in. Let a Marine Corps combat pilot steer you to big profits. We trade single stocks, options, and ETFs for global equities, bonds, foreign exchange, energy, commodities, precious metals, and real estate. This is a typical trading month for us. We made money on 10 out of 11 trades. We bought the S&P 500, made a 16.3% profit, sold short treasuries, bought the Russell 2000, bought Amazon, bought Apple, bought Biogen, stopped out of Biogen. We stop out of losers very quickly. It's a lot easier to dig yourself out of a small hole than a big hole. And then we went on and bought Palo Alto Networks, sold short the yen, sold short treasuries, bought the SPYs, and bought gold. So it's just a matter of time for barbell stocks to break out to new all-time highs. Watch this space melt up going into the end of 2022. Get ready to start reeling in those whoppers with Global Trading Dispatch as your guide. And that is a 24-inch rainbow trout, which I caught at a lake in northern Nevada. This is how our algorithms work. We predicted a major upside breakout in Tesla in June of 2020 right here. So we sent out a trade alert, and it looks like this. Buy Tesla at 202 or best. Opening trade. For this particular position, you needed to buy 49 shares to get $10,000 worth of exposure. What happened? We got a 63% gain in only 20 trading days right here. So did we just sit around and pat ourselves on the back? No, we sent another trade alert saying sell. And it looked like this, take profits. And on this particular trade, we made $7,200 in just 20 trading days. Did we abandon Tesla after that? No, we kept sending out trade alerts after that on every major dip, rode it all the way up to 1,200 doing that. So this is our Hall of Fame, our history of Mad Hedge 10 baggers. We got a 10 times gain on Zoom. We got 10.6 times on Lam Research, the semiconductor manufacturing equipment maker. We got a 16 times gain on NVIDIA, 25 times gain on Square, 40 times gain on Moderna. We bought it before the pandemic, expecting them to cure cancer with this technology. They end up curing COVID first, or at least creating the vaccine for it. And of course, the granddaddy of them all, we got a $400 gain in Tesla, 400 times gain, initially buying it at $3.30 and writing it up to $1,200. So with my Global Trading Dispatch, you get instant trade alerts sent out at market sweet spots, about 200 a year, and all the reasons to execute them. Live bi-weekly trading strategy webinars with an interactive Q&A like this one, special reports on urgent investment topics, invitations to strategy luncheons around the world. And in the next 3 weeks, I'm having luncheons in London, England, Zermatt, Switzerland, and Venice, Italy. More educational videos and webinars than you consume in a lifetime, and access to a 14-year database on investment ideas, searchable by name and ticker symbol. And I'll even give you a name of a good surfing camp in North Africa with a seniors division warning, it's a lot harder than it looks. I think I broke my nose a few minutes after this picture was taken. This is the one-stop shop. Learn all you need for every level. It's for individuals who want to understand what is happening with their retirement funds. It's for people who want to learn how to trade for a living, get the financial education of a lifetime. It's for smaller institutions and financial advisors who can't afford an in-house research department. Get in while the melt-up is going to start. This is what you get. You get my global market comments. These are in your inbox every morning, 5 days a week. And it tells you what to do. You also get our Mad Hedge hot tips, the 5 most important things that happen every day and what to do about them. That is also in your inbox every morning before the market opens. This is what I'm not going to charge you. I'm not going to charge you $100,000 for this service. That's what I charge my big hedge fund clients, and they're happy to pay because I make them millions of dollars. And I'm not going to charge you $10,000. That's what I charge my concierge clients who get my personal cell phone number so I can act as their investment 911. And I'm not going to charge you $3,000. That's the full price of what I'm offering you on my website. This is the real deal. Creating this product cost me millions of dollars. With the best customer service in the industry running it costs me millions more. And yes, we do have live humans doing customer support. I'm probably one of the last ones to offer this. 6 months for just $997. That's a 66% discount to our regular price. It's an offer you can't refuse, but you can only get it through this webinar today, right now. Limited time offer. We only take 25 new subscribers at a time. So it's first come, first serve. I can't wait to make you a top drawer trader. Just click on the chat box on the right and you will find a link to the dedicated sales page. David, go ahead and put that link in there now so people can click through to the dedicated sales page. And there it is, madhedgefundtrader.com, ST0622, which is today. Let me make the money for you to pay for your own subscription. You make the trades. Discover how an experienced hedge fund manager finds and explores the sweet spots in any market. Just click on the chat box on the right. Here's the offer you can't refuse, 6 months for just $997. Let me show you how to make the money for you to pay for your own subscription. 95% of our subscribers pay for the full subscription on the first trade. Buy now and you'll instantly receive a trade alert with an extremely high probability of success that you can execute immediately. Make some of the most serious money in your life. Don't leave good money on the table. 95% of these trade alerts make money. And here is the chart of the trade alert I'm going to send you. Just subscribe to the service and this will hit your inbox within seconds. Okay, let's do some more flying. When you make millions of dollars for people, you get a lot of really interesting invitations. $5,000 cases of wine, dates with movie stars, free tickets to the Olympics, and invitations to fly vintage airplanes. So when my friend Richard Zeiler invited me down to Malibu to fly his 1929 D4D Travel Air, I jumped at it. This particular Travel Air is quite famous because it was featured in the 1929 Howard Hughes film, Hell's Angels, which was about flying on the Western Front in World War I. So I took my 2 daughters down there and we buzzed the California coast and buzzed the surfers that you can see as we fly over the Pacific Ocean here at an altitude of 10 feet, looking at the surfers wave at us. Let me make millions of dollars for you, as I have done for thousands of other people. Just click on the chat box on the right, and that'll take you to our dedicated sales page. So it's always tricky to get this. Oh, there it is. 6 months for just $997. Click on the chat box on your right, and I'm going to take some questions. Is it possible to learn how to do this if I work full time? Absolutely. The great majority of our subscribers have full-time jobs working towards their retirement. All you need to do is be able to look at your cell phone a couple times a day, get the trade alerts, execute them in your own online platform, which takes about a minute to do. And then you're off to the races making money like everybody else. You can read the research in the evenings when you get home from work. What capital is required? We have people doing this with anywhere from $500 to 20 million. Anywhere from students trading from their dorm room beds to giant hedge funds. The smallest position you can get is about $400. That's how much for one of our option call spreads, which generally make between 15 and 20% per month for the people who execute them. Yes, we really do have students trading with $500. Biggest drawdown, you can see it on the chart that we showed you previously. The biggest drawdowns we generally have are 5%. Very rarely, maybe once a year, we get a 10% drawdown, but that's it, because we stop out of losers very quickly. We manage this like a hedge fund. We try to keep drawdowns minimal. And by the way, this is how I manage my own money, and I hate taking losses. So I stop out of losses very quickly. Let's see. Is this stocks and ETFs? No, we actually do all asset classes, stocks, bonds, commodities, precious metals, gold, and even Bitcoin when it's going up. And we do stocks, ETFs, and options. Every trade alert has a stock, ETF, and option recommendation in it, so you can tailor each trade alert to your own experience level and your own risk level. Okay, let's see. Our time frame is 1 month on these trades. We generally enter a position expecting to hold it for a month, but if we get lucky and something doubles in a day, we'll take a profit, and that usually happens several times a year. So occasionally you do things like buy Tesla last week. It goes up $100 in 2 days, and then you want to take profits. And there are a lot of people doing that right now. Okay, any other questions? Okay, let's see. Here's a good question. Why are you doing this if you're already so rich? Answer, this is my way of getting even with Wall Street. I saw them rip off people for so many years. This is my chance to get even, showing the Wall Street secrets to the average guy and showing them how to make money. Also, I just love doing this. I love doing trade alerts that make money for people as well as myself. That is my retirement. That's what I do for fun in my retirement. Okay, let's see, any other questions? Okay, let's see. We got about 10 more minutes. Okay, I'm going to check my store real quick, see how many we've sold already, and see how many we have left. Okay, we have one from Bill in San Diego, California. Thank you very much, Bill, for subscribing. Promise to work hard for your money. Just check your inbox. Get that trade alert done now, because the market is open and you can execute immediately. Let me check the stock that's in that trade alert. And yes, it is still going up. So I would buy it now because this is a great entry point. Okay, here's another one. Mary from Chicago, Illinois. Thank you very much, Mary. Check your inbox for the trade alert. If it's not in your inbox, check your spam folder. If you're a brand new first-time subscriber, sometimes the trade alerts go to your spam folder. Just put the Mad Hedge Fund Trader address in your address book, and that'll keep everything going into your inbox and keep it out of the spam box. Okay, we just had a bunch of new subscribers come in. We're rapidly approaching our $25 subscriber limit. And by the way, the store automatically shuts off at 25. So if you place an order after that, it won't accept your credit card. Okay, let me take a look here. Okay, we've got one. Joseph from Miami Beach, Florida. Welcome to the club. Joseph, best decision you ever made. Look forward to working with you. Check your inbox for the trade alert. Okay, what else is going on here? Okay, let's check the inbox again. Okay, just checking. Okay, Nancy in Portland, Oregon just came in. Thank you very much, Nancy. We've just had Antonio from Austin, Texas has just come in. Well done, Antonio. Okay, let's see if there are any more questions. Check the chat box. Okay. Okay, here's a good question, John. How do you see the market suddenly changing direction in the second half and going to new highs? Well, either this coming month in July, on July 13th, or in August, we will get a CPI report, which shows a sudden dramatic decline in the inflation rate. And you're already seeing that now in the way oil is trading off 20% from its high. Give that a couple of weeks to feed into gasoline prices. It'll start to dramatically fall. And that should show up in either the July or the August CPI. You wipe out inflation and it's off to the races for the stock market once again. So you're getting in here at these levels at generational lows. You're getting in some of the best quality tech stocks at valuations that are at 10-year lows. So this is the sweet spot right around here. This is where you want to get in. It's like buying technology stocks after the dot-com crash in 2000. In fact, a lot of tech valuations now are lower than we saw after the dot-com crash in 2000. So subscribe to our service. We'll steer you into the right stocks at the right times with the perfect entry points with the best chances of making money. Okay. Let's see what's happening here. Okay. Let's see, how are we doing on time? Okay, here's another order has come in. Let me take a look and see who that is. And that is Frank from Delft, Holland. Okay, Frank, if I knew you were a subscriber, I would have added Amsterdam to my lunch schedule in Europe this summer. I love going to Amsterdam, beautiful city, and Delft is even more interesting because it's more of a rural town. Thank you very much, Frank. Look forward to working with you. Here's another one. Zahan has just come in, and he is from Virginia. Thank you very much, Zahan. Check your inbox, execute that trade alert. It'll be one of the best trades you've ever done in your life. I see Frank is saying you're welcome in the chat box. Okay. And it says, I see you work with the Nigerian brothers in the past. Yeah, that was about 6 or 7 years ago. back when they had Option Monster going. I used to speak at their conferences, but they sold the business, banked a few $1 million for themselves, and I haven't talked to them since. And that's the way the Wall Street goes. You create a product, sell it for a big premium, and then go on to the next one. Okay, any other okay. Okay, David, can you hear me? I think I've answered all the questions, and we're just about out of time.